Welcome everyone, not quite to the launch, but to our A2I IIS public dialogue on the sustainability and ESG regulatory landscape in the CEET region. Some short housekeeping. As I just said, we will be recording the dialogue. Again, please mute yourself, use the chat function to ask any questions during the presentation. Raise your hand if you wish to speak later, and should any technical issues occur, please just let us know either via the chat or write a quick email to the A2I Secretariat. So for those of us joining for the first time, the dialogues focus on current and relevant topics for insurance supervisors, and they're supposed to provide a platform for knowledge and peer exchange. Today's webinar is the result of a joint initiative between the A2II and the AZN, the Insurance Supervisory Agency of Slovenia. And to have a deeper understanding of ESG, the A2II and AZN commissioned a survey to understand how ESG standards are integrating into the insurance sector in Central Eastern Europe and the Transcaucasia region. And the result of this report, well, the report is finalized. We haven't unfortunately gotten around to publish it quite on time for this webinar, but we also didn't want to hold off on having this dialogue. So it's currently layouting. We will be able to publish the report in the coming weeks. And I'm very happy to say that we are joined by the IIS today, our partner in organizing these webinars and also in this report. And welcome, Connor. Please go ahead for some short opening words.
No, thank you very much, Yasha, and it's a pleasure to join everyone today. I wanted to say a few words just to note the importance of the topic that we're discussing today. Looking across ESG factors, it's clear that the insurance industry in particular has a strong perspective right across the board, from the environmental, social to the governance. And I think as a supervisory community, we recognize the critical nature of these factors in terms of how they affect our business as insurance supervisors. And it's critically important that as we work across the broad spectrum in which these factors have been identified as critically important and are slowly, but I think steadily being integrated into supervisory approaches, work like this paper that the A2II has been working on with AZN is really timely and I think also very instructive. The CEET region definitely shows a variance in terms of how far they've come in ESG factors and their integration. But it does reassure me to see how important they were viewed. And I think the increasing recognition that this is a topic that, as we go through building that awareness and we identify those opportunities for strengthening supervisory exchange and dialogue, we also look at our partners such as the Access to Insurance Initiative as being really at the front edge of being able to support capacity building initiatives. And so I think that this paper is both instructive in terms of raising the awareness on the issues, but I also think that this dialogue really does speak to the A2II strength as bringing together a wide range of supervisors to discuss the topics. And I look forward to seeing how the A2II and in collaboration with the IIS can support broader capacity building into the future. So with that, I'll stop there, but I just wanted to say congratulations to the A2II. I've seen a draft of the paper. It's very well done. To all the authors who have been involved, I think you all deserve a pat on the back for a job well done. And I look forward to its publication and really seeing how valuable and impactful it can be across the IIS's membership, but also within the broader CEET community. So thanks, Yasha, and thank you, everyone, and look forward to the dialogue.
Then thank you very much, Connor. And then with no further ado, I would immediately invite our first speaker, Gorat Šibe, who has been the director of the Insurance Supervision Agency in Slovenia since January 2019. And since November 2017, he has also been the president of the Council of Experts of the Insurance Supervision Agency. As director, he's also a member of Supervisory Steering Committee and a member of the IOPA Board of Supervisors. Gorat, please, if you could offer some perspective from the Slovenian experience. Go ahead.
Okay, thank you. Thank you very much. First of all, thank you for inviting me to this very interesting webinar. I'm very much looking forward to have even more webinars with respect to the ESG. First of all, I would just like to give you a very short presentation of the CEET region that I represent as a regional coordinator. And I would like to give you a short insight into the characteristics of the region to set the scene for the report that is generally taking into account practices in the CEET region. The region as such consists of 31 jurisdictions, and of course it is represented by different levels of economic development. And the majority of those jurisdictions, except from the European Union countries, are classified as emerging and developing countries and have insurance penetration well below the world average. The population within the region amounts to a bit more than 500 million, so that clarifies the importance of the region as such. And since the 90s, countries of the region have largely transitioned to market economies with democratic forms of government, and now also participate in global markets for goods and services. While many of these countries have experienced a significant economic growth, including a growing financial services sector, most of them continue also to face a large insurance protection gap. So unfortunately, the region is also vulnerable to natural disasters, risks such as floods, earthquakes, winds, and drought. We had a sad example last year in Slovenia with floods that very much for some time had a very disastrous impact on our country and also on the economy of the country. Early studies of the insurance markets in Central, Eastern, and Southeastern Europe mostly indicate uncompetitive and relatively young market. However, over the last 3 decades, the privatization of the insurance sector and the regulation of financial services and also alignment with the IIS insurance core principles paved the way to reform the insurance industry. So nowadays, the majority of the CEET countries are members of the EU, and some of them are also in the accession process, which means that their jurisdiction either align or will eventually align with the EU insurance directives. The key characteristic, I would say, of this vast region is the significant cross-border diversity. And as such, the CEET region is highly heterogeneous in terms of politics, economy, and financial systems. So insurance markets also differ significantly in size, concentration, and also level of maturity. In this regard, I'm very happy that a comprehensive study has been carried out that for the very first time focuses on how ESG standards are integrating into the insurance sector in the CEET region. And as it was previously already said, that was a joint effort of the A2II together with the Insurance Supervision Agency of Slovenia and representatives of the academia, Professor Popovsky and Professor Ksenia Denčić-Mihailov. The survey as such evaluated the current state of insurance regulations and initiatives that encourage sustainable insurance growth in the region. As the net zero transition unfolds, new forms of volatilities are also emerging. So the capital reallocation to low carbon technologies is rapidly reshaping the industry. Also, the new technologies face business cases with uncertain economic viability and scalability. So we can say that companies face increasing demands for transparency on climate risks and emissions, which is also driven by regulatory requirements and investor and consumer advocacy. The risk of litigation for climate interaction is also growing. And against this backdrop, rising physical risk continues to affect communities and economies. So in my opinion, I think that now insurers have a once-in-a-generation opportunity to address new forms of volatility and help catalyze an orderly transition to net zero emissions. And this is done through product and also solution innovation. Yet in our experience, climate aspirations are often disconnected from commercial strategies, which can lead to a lack of a cohesive approach on two fronts. And this is firstly by identifying and prioritizing climate-focused commercial opportunities, and secondly, also taking a go-to-market approach to better source, underwrite, and share new types of risks. As we know, there is a very ambitious goal of European Green Deal, which is aiming at achieving carbon neutrality in 2050. And financial regulation has been explicitly integrating objectives related to the management of these climate-related risks, and also transition to a low-carbon economy for several years. In this framework of the Commission's renewed sustainable finance strategy, the insurance sector is at the forefront of this ambition. Green products are products that not only protect policyholders in the event of damage caused or injury suffered, but also protect and promote an eco-friendly environment. So sustainability risks are becoming, we can say, increasingly relevant for the investment and also underwriting activities of the insurance and insurers as such. The main focus in the insurance sector, as well, we can extend it to the financial sector as well, is on climate, physical, and transition risks. Sustainability risks also require a forward-looking approach, and that means that insurers are expected and also somehow exposed to physical and transition risk through several channels. Events related to climate change do not occur in a linear manner and will therefore also increase the level of uncertainty and instability. We are also confronted with the difficulty with data. However, I think that implementing the strong framework is not a very easy task, because regulators may stipulate more ESG reporting, and shareholders can demand investments that meet their principles. But again, it's not easy to gather and analyze the data when reporting and metrics is still kind of fractured. This process is defining and creating ESG metrics from what is often predominantly research opinions, and also create somehow a confusion, clarity. So I think that a key challenge is to find a transparent and credible and valid ESG data, and gather it into an efficient platform that would enable efficient and meaningful metrics to evidence all the ESG outcome. And now, finally, coming to some experiences at AZN, our Slovenian Insurance Supervision Agency. We found the main challenges in regard of the integration of the climate change related risk. That means transitional and physical risk in ORSA processes. And the areas of kind of concern, I would say, are the identification of various types of climate-related risk exposure that may affect the undertaking. And furthermore, it is somehow hard to measure and assess climate change risk exposure while taking into account also different time horizons, not only short-term, but also medium and long-term time periods. And last but not least, there is identification of material climate change risk for particular undertaking businesses. The main challenges in this regard, in regards of the integration of the sustainability risk into the governance system and prudent person principle investment decisions are in setting clearer goals in various levels of the undertaking's business activities, as well as also before mentioned metrics and criteria, strategies and policies. And this could also include, for example, limiting investment in non-sustainable activities in companies, also introducing the ESG criteria and rating in the investment decision. And there is also a bit of uncertainties how the allocation of responsibilities should be conducted. To summarize, I would say that the insurance sector, which was once a bastion of traditional investing, now stands at the forefront of sustainable investment practicing around the globe. And the recent strategy shifts within insurance companies toward more sustainable investing. And this is not just a testament of evolving market dynamics, but also deeper understanding of long-term value creation that extends beyond more and just profitability. With the right response, I believe that insurance firms can be part of the solution in financing the transition, as well as providing the protection against climate risk, also by helping companies in the wider world to mitigate for and adapt to a changing world and deliver on commitments for a sustainable future. So I will stop here. And I believe we are all very much waiting for the presentation by Professor Ksenia and Klime, and this will be the core of our today's event. So I'm very happy that we have, as I said, these kind of events, and looking forward to more events with this substance. Thank you very much.
Thank you very much, Gorash, for your support in creating this report, for your participation today, also for the very thorough introduction to the topic and the Slovenian experience. Thank you very much. We will now move on to indeed Professor Ksenia Denchis-Michailov, who is a full professor in corporate finance at the University of Niš. She is an associated member of the Center of Scientific, Interdisciplinary Risk and Sustainability Management at the Ostfalia University of Applied Science and a founding member of the Eastern European Risk Assurance Association and the associated editor of the Southeastern European Journal of Economics. And together with Professor Klime Popolski, the author of the report we are presenting today, Klime Popolski, he lectures at the insurance department at the University of Kliment Oritsky. Also, he is attached to the Vienna Insurance Group, who is a leading insurer in Central and Eastern Europe, acting as the CEO of the subsidiary in Macedonia. And he served as a chairman previously of the Macedonia Insurance Supervisory Agency from the establishment of the authority in 2009 until 2019. Thank you very much both for your very valued dedication to this report, for your authorship. And I think I'll give over to Ksenia now to actually give a more in-depth presentation of the report. If anyone in the audience has any questions, please hold them until after the presentation or put them directly in the chat, and then we can follow up once Ksenia is through with her part of the presentation. Thank you.
Thank you, Asha. I will start with okay. Is everything okay?
Yes.
Can you see the presentation? So
everything is good. Thank you.
Thank you. Thank you once again for this introduction and for the invitation and for this opportunity to present the result of the survey, which, as you said, was jointly realized by Assessed Insurance Initiative and the Slovenian Insurance Supervisory Agency, my colleague, Professor Klina Popovski, and myself. So why this topic? As already said by Conor and Gorazd, ESG is a very interesting, very important topic. And since 2004, when the term ESG was used for the first time in UN Global Compact document, the ESG movement has grown to a global phenomenon, and ESG data is going mainstream. Increasing ESG challenges and relating changing risk landscape demand nowadays also from insurance industry holistic and far-sighted risk management in which ESG issues are considered. As risk managers, risk carriers, and investor, the insurance industry has a vital interest and plays an important role in the transition to a net zero resilient and socially just economy. Financial regulators also globally are taking interest in sustainability issues by applying actions and requiring more scrutiny around them. So the European Union is a global leader in its attempts to integrate sustainability in its regulatory framework. Compared to the European Union, for the most countries of CEET region, ESG issues and sustainability agenda is still an ambitious development challenge, overshadowed by existing socioeconomic and political problems in those countries. Although the transition to a more sustainable economy require from insurance supervisory authorities to address ESG issues in their supervisory frameworks, aside from CEET countries that are EU members, regulatory framework for sustainable finance and insurance is still undeveloped in the rest of CEET countries. So consequently, there is a few researches on this topic in the insurance industry in this region. And this is the reason that our survey wanted to fill this gap. And with the aim exactly to assess the current status of the insurance regulations and initiatives which promote sustainable insurance growth in the CEET region.
Apologize to quickly jump in, Xenia. The translator just asked me if you could speak a slightly bit louder for him to capture the translation. Thank you.
Okay, no problem. So the survey took place from January to March in 2023. 30 authorities from 27 CEET jurisdictions were invited to respond. We are very satisfied with the responsiveness rate of 82%. So we received answers from the jurisdictions you can see on the slide. As you can see, these are the countries from the European Union, but also the countries which belong to Southeastern Europe, Eastern European countries, and also Israel was invited to take participation in the survey. So at the moment, you can see the EU member accession status of those countries. So that was the, I think, the data from 2-3 months ago. So I use the occasion to thank all the supervisors who have participated in the survey for their valuable insights, comments, and data they supplied. So the questionnaire was consisted of 22 questions divided into 4 parts that you can see here on the slide. Our deep dive into survey data resulted in very important findings, and today we want to draw your attention to 6 key insights and 10 findings which will be discussed later. So our general impression is that insurance sector consideration of ESG issues and risks in the CEET region have not yet gained momentum. So insurance sector consideration of sustainable finance and ESG issues and risks have accelerated globally, particularly in the European Union in the past 10 years. However, considering the supervisory and regulatory frameworks and further developments planned by the authorities in this area, we can say that insurance sector's consideration of ESG issues in the CEET region have still not gained momentum. However, the region is not homogeneous, and according to the ESG regulatory framework development, the CEET countries in the survey belong to different maturity stages. We divided them into 3 broad archetypes named established, advancing, and initiating. The first group of country, established group of country, which is to here belong some European Union countries like Croatia, Lithuania, Hungary, Latvia, Slovenia, and Israel. These are the countries that have legislation and non-legally binding documents to address ESG integration in investment activity, in insurance product offer, and sustainability disclosure. Furthermore, those countries adopted and apply specific guidelines to identify, assess, measure, and manage climate-related risks. So there is a regulation. In the case of the EU countries, this is the whole EU sustainable finance regulatory framework. In the case of Israel, this is national regulation. The second group of countries, we call them advancing countries. Here belong, for example, Estonia, Slovakia, Poland, Bulgaria. Here, of course, there is EU binding legislation in place. However, the integration of climate-related risk in the regulatory and supervisory framework is lagging behind the first group of countries. And the third group of country, initiating group, we put them Western Balkan, Eastern European, and Transcaucasia countries. They have not yet started integrating ESG factors and risk into their regulatory actions. However, they may have initiated that or plan to initiate that work through EU accession process requirements or through international collaboration, like through different twinning projects. We also try to transform our qualitative data we received in the survey and to translate them into quantitative data and to find out are there any relationships between key variables. And in this regard, we found out that there is a relationship between the maturity of the ESG regulatory framework and the insurance market penetration. That means that the supervisory authorities operating in the market with higher penetration are focused on the implementation of new standards and methodologies for managing emerging risks, such as climate-related risks or general ESG risks. On the other hand, the supervisory authorities operating at the markets characterized with lower penetration are primarily focused on the insurance market development. The second finding is related to the supervisory authority structure. As you can see here on the slide, there is a divergence in the institutional structure employed by insurance regulators and supervisors in the CEET countries. The structure can be of integrated part integrated institutions and independent supervisory authorities. So even though it could be hypothesized that the higher level of ESG regulatory framework development is associated with the integrated supervisory authorities, the findings of the survey indicate that the level of the ESG regulatory framework development does not depend on how the insurance supervision is structured. In order to evaluate and measure ESG risks in a common and comparable way, a fundamental part is having a common definition of ESG factors and to understand how these factors translate into financial risks and may impact institutions individually and financial system as a whole. In the EU policy context, the Commission Delegated Regulation 1256 from 2021 is a key milestone in defining sustainability risks, and this definition of sustainability risk has been used in 9 of 23 authorities, while the definition of physical and transition climate-related risks given in EIOPA document have been used in 5 of 23 authorities. Speaking of the criteria that can be used for the climate risk assessments, 39% of the respondent supervisory authorities have established qualitative criteria like scenario analysis for the assessment of the impact of climate-related risks, and the same percentage have in place quantitative criteria or stress test for the assessment of the impact of climate-related risks. At this stage, our aim of the survey and the report, which will come, is to promote increased awareness of the climate-related risk, the importance of investing in developing assessment capabilities of those supervisory authorities that are missing them, and experimenting with different approaches and engaging in dialogue to promote cross-learning. So even though a number of supervisory authorities have started incorporating both qualitative and quantitative criteria for risk assessment, we can say that the industry is still in the experimentation and innovation phase. The third finding is about risk, about awareness raising campaigns. According to the results, awareness raising is an important initial step for insurance supervisors. This includes raising awareness about the significance of sustainability factors and risks, both within their authorities and within their insurance market, which involves educating internal stakeholders, financial institutions, association, insurance companies, and so on. 57% of the respondents are running or plan to run an awareness raising campaign events on topic of insurance sustainability and ESG in different forms you can see on the slide, like green publications, international conference in ESG issues, thematic seminars, and so on. Although almost all CEET countries have defined national policy approaches to achieve SDGs, national sustainable finance strategy focused on support to environmental and socially sustainable financial system in the long run is usually missing. Only in a few cases these supporting frameworks exist, and you can see on the slide the list of countries which have those documents. So considering that the purpose of this supportive framework is to create a sustainable finance ecosystem, to organize and to coordinate activities among different stakeholders, including policymakers, supervisors, regulators, associations, corporations, to accelerate the expansion of sustainable finance. The aim of this document is to incentivize financing of sustainable projects by private financial market players, to mobilizing funds for green goals. Considering all that, we think that there is a strong need to develop and further promote these strategies focused on the financial sector contributions to the SDGs. As we know, the SDGs were adopted by the United Nations in 2015 as a universal call to action to end poverty, protect the planet, and ensure that by 2030 all people enjoy peace and prosperity. Insurance supervisor can support achievement of the SDGs, and the insurance sector plays an important role in achieving 9 of the SDGs, and indirect and supporting role in 5 of SDGs, which is also highlighted in the policy report of Access to Insurance initiative. The finding of the survey indicate that the support of national and regional climate initiative and the promotion of the importance of the insurance sector in achieving SDGs are the roles assumed by only 25% of supervisory authorities. What is more important is that under supervisory mandate, authorities can collect, and they already collect, the necessary data needed to meet SDGs goals relevant to related product offerings, such as data on premiums, number of contacts, claims data, distribution channel, and so on and so on. However, this role of the insurance supervisors and insurance industry is not perceived by the authorities. It is, as you can see from the slide, it is only 11% of the respondents that indicate that evidence and data collection to assess gaps and develop policy measures to achieve SDGs as is an important role of insurance. Based on the survey responses, solvency, market conduct, financial stability remain a high priority for authorities due to the rapid growth of cyber threats and cyber attacks. IT and cyber risk have gained importance and are identified as supervisory priorities in 16 authorities. Regarding sustainable finance, 14 authorities out of 23 have recognized the importance of this topic by assigning it as a supervisory priority. Sustainability issues such as greenwashing or stress test on environmental risk are even less observed as important. The survey also focused on identifying the most materially important environmental, social, and governance issues in the insurance sector. As you can see from the slide, governance issues are considered to be the most critical to the success of the sustainability of the insurance industry in the CEET region. Among governance issues, the actuarial function has the most material importance, with 68 of total responses. Also very high scores on the importance of the internal audit function and the quality of corporate governance, contributing to building trust and maintaining financial stability over the long term. Among S issues, personal data security has a high score. The use of digital technology has become more prevalent in the insurance industry nowadays, creating, of course, new risks and challenges for data protection. With respect, we expected, of course, the environmental issues to be identified as also as most materially important, but the results show less relevance than S and G issues. However, in recent years, there has been a significant increase in regulation and around environmental issues. They are undoubtedly critical, but the awareness and maturity of environmental initiatives in the insurance industry are still evolving in CEET countries, and these issues, environmental issues in the CEET countries, may be gaining traction at a relatively slower pace compared to social and governance matters. However, this does not diminish their long-term importance, and it highlights exactly the need for continued efforts to raise awareness and drive sustainable practices in the insurance sector. The survey findings identified the most relevant topics for supervisory capacity building. The figure shows that 19 authorities have limited capacity resources and expertise to develop a regulatory framework and oversee the integration of ESG issues. 4 jurisdictions indicate that they are relying on external support and consultants. These suggest that there is a need for additional resources, both human and financial, to effectively address ESG-related issues in insurance regulation and its implementation, as well as in supervision. By investing in education and training in the areas of ESG and SDG, and integrating climate-related risk into prudential supervision and market conduct regulation, the authorities can enhance their regulatory capabilities. 86% of the responders indicate a strong need for education and training in understanding and implementing ESG practices within the insurance industry. The high percentage assigned to integrated climate-related risk into prudential supervision and market conduct indicates a strong need for build necessary skills and tools in assessing and managing climate-related risks within the prudential oversight of insurance companies and ensuring customer confidence and fair treatment. And the last findings is related to most pressing risks and challenges in setting supervisory priorities and developing strategies in the sustainability and ESG regulation domain. The most pressing risks are lack of data, expertise, internal capabilities, and resources. Additionally, challenges related to international standards, insurance sector capacity building, regulatory clarity, political support also need to be addressed. By focusing on these challenges and implementing appropriate measures, regulatory authorities can enhance their supervisory effectiveness and drive the adoption of sustainable finance practices within the insurance industry. Taking into account the key findings of the survey, we recommend the following steps at the government as well as the regulatory and supervisory level. The governments should prioritize a comprehensive approach to drive sustainable finance. This includes define national financial strategies that align with sustainability goals and incorporating ESG principles and standards into regulatory framework. Additionally, fostering intensive and strong collaboration with financial stakeholders is critical for effective implementation. The government should also actively raise awareness campaign, education initiatives, and support for research projects to promote sustainability. By prioritizing these actions, the governments can create a conducive environment for sustainable finance and contribute to long-term ESG implementation. Regulatory and supervisory authorities should also prioritize several key actions in the promotion of sustainable practices effectively. In the first place, strengthening capacity building initiatives is essential to equip regulators with the necessary skills and knowledge. Then, promoting ESG-related guidelines and standards, which can help to ensure that insurance and insurance intermediaries are following a consistent approach to ESG integration and sustainability. Then, encouraging insurance companies to conduct thorough ESG risk assessment to identify and assess potential ESG-related risks across their operations, including underwriting, investing, and risk management. Also, strengthening governance and oversight, requiring from insurance companies to disclose their sustainability strategies, sustainable risk management frameworks, encourage the adoption of ESG-related metrics and benchmarks to guide insurance companies in evaluating and managing their ESG exposures. Prioritizing training programs and facilitating knowledge transfer, fostering and participating in technical dialogue among regional and global insurance supervisors. By prioritizing these actions, insurance regulators can proactively drive positive change and contribute to a sustainable and responsible insurance industry. Here I will end with the presentation of this survey, and thank you very much for your attention.
Thank you. Thank you very much, Senja. That was very interesting, a lot to take in, I think, for everybody. I would just ask in the audience round, since we don't have much time at the moment, before we have our hour full, do you have any questions that you would like to ask to either Xenia or Klima at the moment? I don't see any. Oh, there is one from Matthias. Please go ahead.
Hello, Matthias here. Thank you so much, both of you, for this very interesting input. And I think you really covered a lot of aspects and brought up a lot of questions to us, and I think also to everybody who will, as a guideline to read that paper. I do have one specific question on your recommendation, this, especially as you are saying that that the regulator should reach out to other stakeholders of the financial sector, and that you want to, and that there is a need for building regulatory framework. We have a lot political attention on sustainable finance taxonomies at the moment, and I think there's also a big push from the European Union to support countries in developing sustainable finance taxonomies. I have not seen any insurance aspects in these taxonomies. Do you see there an opportunity for you to become active right now because there is so much attention, or do you think that it is a little bit too early to lobby for our topic to be discussed and to be integrated in that overall discussion at the moment? Thank you so much for your insights.
Thank you. Klima, will you take the answer?
Okay, yes, I will take the answer. So thank you very much for your question. Well, first, I would like to explain the purpose of why, as a recommendation, we put this collaboration that should be between the insurance supervisory authorities and other financial supervisory authorities, but also other international organizations. So we should, as an insurance industry, it's a financial service industry, and it could be on the same page, on the same line, with the same direction with other financial service industry. In our region, we have very heterogeneous structure of the supervisory authorities. So we have countries where we have independent insurance supervisory authorities, in some countries under the umbrella of the central bank, where they supervise the all financial institutions. So therefore, this joint communication and collaboration is very important in order to facilitate the knowledge sharing, then to participate in the technical dialogues. Also, what is important that you should communicate with the relevant international organizations such as IIS, A2I. For those who are the members of the European Union, EIOPA, it's also kind of important hub. But even for those non-EU countries who have strategic goal to join the EU or in the process of accession to the European Union, the open dialogue with EIOPA and to follow all the guidelines that are coming from EIOPA and also from European Commission on the ESG topic should be communicated and then later on to be implemented in domestic legislation. So this is about the collaboration. So coming to your question about the taxonomy and sustainable finance, I mean, this is something that is going on as a discussion at the European Union level. So maybe we cannot provide you some concrete action, but my personal opinion is that insurance, it must be involved in more important meaning and with more contribution on the sustainable finance. So therefore, I think that insurance must pay a lot of attention for how can contribute to achieving the sustainability goals.
I can also add something concerning the EU sustainable finance taxonomy. There is, I think, a paper or policy recommendation or a report published by EIOPA that currently only a small portion of the insurers' investments, for example, when we talk about insurance investment, that they are made in economic activities which might be eligible to the EU sustainable finance taxonomy. In the European Union. So there are a small portion, they are either eligible or aligned with the EU sustainable finance. But if here in EU, there are a small portion, I don't remember, it's like 5% of the total volume of investment. What can we expect then in the other CET countries? So I think that there is this is a journey, as we can.
Yeah, this is true. But insurance is often forgotten at that journey, right? And especially if you talk about really investment, and this is, I think, what the taxonomy is all about, to ease investment. There is no investment if you don't have insurance. So insurance has to be an integrated part right from the beginning of that discussion. But yeah, it's I think we could discuss on that one quite a bit.
Yes.
Thanks very much.
Welcome.
Thank you for the question, Matthias. Unfortunately, we already have our 1 full hour and we'll have to remain at that one interesting question. So I would like to thank everyone that was involved for the dialogue, to our speakers, Ksenia, Klime, and Gorac. Thank you very much for both participating today, sharing your insight, but also for the very central role you played in actually getting this report out. As I said, it's unfortunately not published at this time. This will happen in the coming weeks, and we will follow up with an email to everybody that has registered to the event. Also, many thanks to our translators who could hopefully keep up with all the information that we shared at this moment. I have one last ask to the participants. if you would be able to answer very quickly in the poll I've just shared, that makes it a lot easier for us to adjust later on to kind of see what topics are interesting to you and which ones are not that closely related to your work stream. That would be great. I hope the poll is visible.